Hey, it is Troy Stavros with Cornerstone Realty Associates here in Knoxville, and it is time to go over our monthly market update, looking at all the data and what is happening in the market through the end of July. And as we move through 2024, the housing market in East Tennessee and Knoxville continues to experience significant shifts that are influenced by generational trends, mortgage rates, and market dynamics. Let's take a look at the generational trends and market influence. So, the National Association of Realtors recently released a 2024 home buyer and seller generational trends report. And in that report, it highlighted that millennials were the dominant force in the current home buying market. Millennials have surpassed other generations, including the boomer generation, this year, underlining their critical role in shaping the housing landscape. A striking revelation from the report is the widening net worth gap between buyers and renters nationwide. Renters facing high costs without the benefit of building equity are falling further behind financially. This trend shows no signs of reversing, emphasizing the long-term value of homeownership. Next, mortgage rates and their impact is huge. The sharp increase in mortgage rates from around 3% to 7% between 2022 and 2023 triggered a significant lock-in effect. Many homeowners are hesitant to sell because they might be unable to qualify for new mortgages at higher rates, or they're unwilling to swap their lower mortgage rate for a higher one. This effect has reduced turnover and new listings in the resale housing market, maintaining upward pressure on prices. Now, mortgage rates have been a significant factor in the housing market's dynamics, and recent developments suggest a favorable turn for potential home buyers. The markets are already baking in expected rate cuts anticipated in September due to the belief that inflation will continue to slow, while concerns about a weakening economy prompt the Federal Reserve to act. This expectation alone is already exerting downward pressure on mortgage rates. The 10-year Treasury yield, which is a key indicator for mortgage rates, has recently dropped below 4%, currently sitting at approximately 3.85%. With a typical spread of around 2.6 percentage points, mortgage rates are now just below 6.5% as of today, with the current 30-year fixed mortgage rate at 6.49%. This development is positive news for home buyers, as mortgage rates make purchasing a home more affordable. Now, additionally, the U.S. inflation rate for July was reported at 2.9%, slightly below the expected 3%. This marks the first time since March of 2021 that the inflation rate has fallen below 3%. The core CPI inflation rate was in line with expectations at 3.2%, reinforcing the narrative of a cooling inflationary environment. Now, as far as rent in Knoxville, the rental market in Knoxville continues to show signs of slowing. The average rent in the second quarter of 2024 increased slightly to $1,482, a modest $34 rise from the first quarter. Now, this reflects a continued decline in rent growth compared to previous quarters. While rent growth has moderated faster nationwide and across the southern region, Knoxville's market has seen a more gradual slowdown since 2023. With decreasing occupancy rates and rising supply, this trend is expected to persist. Now, let's jump in and take a look at the local numbers through the end of July. Okay, so looking at all of East Tennessee, we are seeing from July of 2024, looking back to July of 2023, year over year, home sales are up 7.1%. Pending sales are up 12.4% in East Tennessee. The inventory of homes is up 42.7%, so still quite a bit more inventory on the market now compared to last year. New listings are up 18.9% compared to a year ago. And the median sales price is up 7.14%, and coming in at $375,000. The absorption rate is up from last month. Last month we were at 3.38 months worth of inventory, and this month in East Tennessee we are up 3.57 months worth of inventory. So as that continues to increase, that is saying that demand is slowing a little bit and supply is increasing. Well, we can see inventory is up. So when we watch absorption rate, that tells us about supply and demand. So it's saying demand has come down a little bit, supply has gone up a little bit in East Tennessee. Looking at the number of listings, you can see in East Tennessee it has been a steady incline in the active listings ever since February. And again, over the last month increased as well. So we are at the highest amount of inventory that we have seen all year as far as active listings. Over the last month, we saw a little jump in new listings as well. As far as pending listings, we saw a little bit of a jump in pending listings over the last month. And as far as sold listings, we saw a little jump as well. You see that we saw a big decline from May to June, but June to July, we saw a little bit of an uptick in sold listings. When we look over here at listing prices, we can see the active listings have pretty much held steady over the last 4 months. So those are staying stable. We aren't seeing listing prices jump a lot higher in East Tennessee, but not seeing them go down either. And the same can be said for the new median list price, this green line also holding steady. So existing listings and new listings are all staying steady. And pending and sold listings are all pretty steady as well in East Tennessee. We saw a little bit of a drop when we look here in the pending listings. We saw a little bit of a drop over the last month in the price of pending listings, and a little bit of a drop, very small, in sold listings. So those are staying pretty steady as well. We can see the continued rise in the absorption rate, telling us that there is less demand and more supply on the market right now, and there has been continually ever since February. We can also see there's more negotiation happening in the market in East Tennessee. When we look at the sold to list price ratio, we have seen that drop ever since May. It has dropped consistently each month after that. So from May to June and June to July, we've seen that number drop down to 95.8%. So that is definitely telling us there is more negotiation happening on the homes that are going under contract. As far as days on the market, it stayed pretty steady over last month. And then down here, when we look at the sold listings, we can see the highest number of sold listings happened in this price point here, the 300 to 350 price point. As far as pending listings, the 350 to 400 saw the most homes go pending last month. As far as active listings, there's the most available inventory right now in the $350,000 to $400,000 price point. And as far as new listings that came on the market in July in East Tennessee, the most homes came on the market in the $350,000 to $400,000 price point. All right, let's look and see what is happening in Knoxville. So Knoxville, this is everything with a Knoxville, Tennessee address. Compared to 1 year ago, home sales are up 15% in Knoxville. The pending sales are up 15% in Knoxville through the end of July. New listings were up 17.6% compared to a year ago. Inventory of homes up 51.6%, so quite a bit more inventory on the market right now than there was a year ago. And the median sales price rose 3.97% compared to a year ago, coming in at $395,000, with the average sold price per square foot coming in at $228 per square foot in Knoxville. The absorption rate in Knoxville still considerably lower than normal, only coming in at 2.02 months worth of inventory, but it is up from last month. Last month we were just at 1.89 months worth of inventory, so we did get up over 2 months worth of inventory, barely, but remember that a healthy market has 6 months worth of inventory. So we still have a very low inventory situation in Knoxville. Let's jump over and take a look at the data graphics for Knoxville and see what's happening there. So when we look at these graphics for Knoxville, we can see, again, over the last 4 months, the number of listings has steadily risen. So more and more active inventory. Let's just go ahead and show you just that line. More and more active inventory. There's been quite a jump here compared to April, and then May, June, July, we've seen lots of inventory stacking up on the market. And it's not all necessarily new listings. It's because listings are staying on the market longer. That is why we're seeing that jump. When we look at new listings, we saw a little bit of an uptick over the last month in new listings. When we look at pending listings, there was a little uptick last month as well in pending listings, and sold listings saw a little uptick over the last month as well. When we look at listing prices, the active median list price has held steady over the last month. It's kind of bounced around, but over the last month, it has held steady. When we look at the new median list prices, we can see that jumped up over the last month. Pending list prices had a little jump over the last month, and sold median list price actually came down a little bit over the last month. So that will be something that we want to keep an eye on. Absorption rate, again, has been rising ever since April, showing that we have less demand, more supply on the market. And again, here, like we saw in all of East Tennessee, we're seeing a gradual decline in the sold to list price ratio, meaning that we are seeing more negotiation happening on homes, and they're selling for less than list price comparatively to earlier in the year. Days on the market has come down a little bit over the last month. When we look at the homes in Knoxville and what price points have been selling, the number one price point for sales in Knoxville is the $300,000 to $350,000 price point. As far as pending listings, the number one price point for pending listings last month was the $350,000 to $400,000 price point. As far as active listings, the most active inventory is available in the $350,000 to $400,000 price point. And the most new listings that came on the market in July was it was pretty close. The $300,000 to $350,000 price point had 98, and the $400,000 to $450,000 had 96, $350,000 to $400,000 had 95. So this range right here had the most listings come on the market, the $300,000 to $450,000 price point. Okay, let's jump over and look at some of the other information for Knoxville here. So when we look at that here, this is the market action index, which we have talked about before, and I will explain it again in case you haven't seen it. When you look at this speedometer, this is showing you what the market action index looks like. It goes from 0 to 100. The break-even point at 30 is the break-even point for a buyer's market and a seller's market. Below 30 is a buyer's market. Above 30 is a seller's market. And you can see right now we're at about a 49 here. Now, when we go back and look at this chart, you can see that the market action index in Knoxville has been going lower and lower, and you can see over the last few weeks, it has dipped below where we were pre-pandemic. So we're way below where we were in 2022 and 2023, and now we've dipped below 2019 as well. So as far as it being a buyer's market or a seller's market, right now it is the least of a seller's market that it has been since 2019. We're not in a buyer's market, which we saw, but you can see that it's definitely trending more towards a buyer's market, although we are still in a seller's market. We're right now, as of this past Friday, down to a 40.57 for the market action index. Again, when we get to 30, it enters into a buyer's market. So you can see the market has been getting softer, less demand, because as the market action index follows supply and demand, so the further down it goes, it means the less demand you have. The higher it goes, the higher demand you have. So you can see that demand has been decreasing. As far as inventory, again, we saw a steady increase in inventory, but we are still less as far as inventory than we were pre-pandemic. We're well above where we were the last few years, 2020, 21, 2022, 2023. We're above those, but we are below where we were in 2019. When inventory gets above where it was in 2019, we can really start to worry about prices moderating more. But because inventory is still low, it's keeping prices high. We're pretty much almost at the same place as far as the median list price goes of active listings that we were at last year, considerably above where we were in 2019 and 2022, but we're just a hair under where we were last year. So the median list price is actually a little bit less than where it was 1 year ago. And then as far as price reductions, right now we are higher than where we were the last few years in price reductions, but as of this past Friday, 47% of the homes that are actively on the market have had a price reduction, and that is still trending higher than we were the last few years. You can see over here on the side, as far as median list price, they have continued to trend higher over the last 90 days. The median price of new listings has stayed pretty flat over the last 90 days. Price per square foot has stayed pretty flat over the last 90 days. The median days on the market has actually gone up, so we're seeing things take longer to sell. Price decreases, again, have increased over the last 90 days. Inventory has increased over the last 90 days, and the market action index has fallen over the last 90 days. So all of those things that we just mentioned are telling us that the market has weakened over the last 90 days. There's been less demand, more supply over the last 90 days. That's telling you what has happened in the market. This is what the market action index has done, and you can see on the 7-day average, it saw a big drop over the last few days. So this is definitely something that we want to keep an eye on, because this is telling us about supply and demand. If this line is going down, demand is decreasing. If the line is going up, demand is increasing. So as of right now, we can see demand is decreasing in the market. When we look down here at our market segments, it shows us what is happening in each of the 4 market segments. So that's splitting up the market into 25 percentiles. So in the lowest 25%, the median price of homes in the lowest 25% of the market in Knoxville comes in at $297,800. In that segment, you can expect to get about 1,430 square feet, a 3-bedroom, 2-bath home that's about 68 years old. Now, as of last Friday, this lowest segment saw 49 new listings come on the market and 35 listings get absorbed. So just a few weeks ago, we were seeing just as many get absorbed as came on the market. So this is showing us that demand is weakening a little bit, even in this lowest price segment. And the median days on the market in that segment is 35 days on the market. That has gone up the last week or so. This was down at 28. So we're seeing it take longer for homes to sell, even in this lowest price segment. So again, that is showing us that demand is weakening. And the next segment up, that segment comes in at $429,950. In that segment, you can expect to get 2,063 square feet, a 3-bedroom, 3-bath home, about 29 years old. The number of new listings that came on the market in that segment last week was 38, and 36 of them got absorbed. And the median days on the market for the homes in that segment is 28 days on the market. So you can see that that is probably the hottest segment right now in Knoxville, is this segment where the average price is $429,950, because we saw almost as many homes get absorbed as new homes came on the market. Next segment up comes in at $587,000. In that segment, you can expect to get 2,644 square feet, a 4-bedroom, 3-bath home that's about 13 years old. In that segment last week, we saw 35 new listings come on the market, and we saw 23 of those listings get absorbed. So not as much demand in that segment. And in that segment, the average days on the market is 35 days for the homes that are currently active on the market. Then in the top segment, the highest price segment of Knoxville, that median price comes in at $950,000. In that segment, you can expect to get about 3,600 square feet, a 4-bedroom, 4-bath home, approximately 14 years old. In that segment, we saw 26 new listings come on the market, and we saw 18 get absorbed. So not as much demand in that high price segment. And in that segment, the homes that are actively on the market have been on the market for a median of 42 days on the market. So let's look at the countywide and what is happening in the surrounding counties. When we look there, we can see, compared to last month, the available inventory of homes in Roane County. There's 56.7% more inventory available in Roane County compared to a year ago. As far as pending sales were up 33.9% compared to a year ago in Roane County, and the median sales price was up 8.28% and came in at $322,950, with the median sold price per square foot in Roane County coming in at $184 per square foot. In Knox County, available inventory was up 54.1%. Pending sales were up 17.3% compared to a year ago, and the median sales price in Knox County was up 4.03% and coming in at $390,000, with the median sold price per square foot in Knox County coming in at $226 per square foot. In Anderson County, the available inventory was up 42.2% compared to a year ago. Pending sales were up 11.4%, and the median sales price was up 13.43%, coming in at $328,950. And the median sold price per square foot in Anderson County came in at $194 per square foot. In Loudoun County, available inventory was up 64.4% compared to a year ago, quite a bit more inventory. Pending sales were up 18.5%, and the median sales price in Loudoun County was down 1.23% compared to a year ago, coming in at $525,900, with the median sold price per square foot coming in at $248 per square foot. In Sevier County, the available inventory was up 46.55% compared to a year ago. Pending sales in Sevier County were down 31.51%, quite a bit, compared to a year ago. And the median sales price in Sevier County was down 12.12%, coming in at $452,500, with the median sold price per square foot coming in at $254 per square foot. In Blount County, available inventory was up 35.4%. Pending sales were up 33.3% compared to a year ago, and the median sales price in Blount County was down 1.37%, coming in at $394,500, with the median sold price per square foot in Blount County coming in at $238 per square foot. I would go ahead and say that this is the first time that we've seen multiple counties come in below where they were as far as median sales price per square foot year over year. So this is definitely something that we're going to want to watch month over month to see what happens to prices in these counties as well as the other counties. But Roane, Knox, and Anderson all continuing to stay strong and above where they were, increasing in the median sales price. But we did see Loudoun, Sevier, and Blount County all fall below where they were 1 year ago in median sales price. So we're going to want to keep an eye on that. Okay, so in summary, let's talk about the market resilience even amidst economic pressures. So despite the broader economic pressures, including higher mortgage rates that have remained below 7%, but still elevated compared to historical lows, the housing market in Knoxville and the surrounding counties shows significant resilience. The steady increase in median sales price across many counties, particularly Knox and Anderson counties, indicates that demand remains strong even as buyers face higher borrowing costs. The consistent rise in inventory, with Knox County seeing an increase of over 50%, suggests that sellers are still entering the market, possibly motivated by the higher prices. Now, there's diverging price trends in the surrounding counties, which we just saw. The surrounding counties present a mixed picture. Sevier County saw a significant decrease in its median sales price by 12.12%. This could be due to several factors, such as a shift in buyer demand, which we know could very well be the case because Sevier County has a lot of investors, a lot of investment properties, and with high interest rates, there's less ability to cash flow, so you're seeing less investors coming in and buying up the properties there, so that could definitely be a factor. Also could be influenced by a recent surge in inventory and pending sales that might be putting downward pressure on the prices. And it also might be experiencing a correction after a period of rapid price increases, because we saw that over the last few years as well. Now, in Loudoun and Blount counties, these also saw slight decreases in the median sales price, down 1.23% and 1.37% respectively. These small declines might suggest a stabilization in these markets after previous growth spurts or reflect changing buyer preferences or economic conditions within these specific areas, but those are things that we'll want to keep an eye on month over month. Now, there's continued demand in key areas. So in contrast, Knox County and Anderson County and Roane County continue to see robust demand, as evidenced by rising median sales prices. This demand is likely driven by Knoxville's status as a regional economic hub with a strong job market and desirable living conditions. The high demand in these areas is leading to sustained, if modest, price growth despite the challenging interest rate environment. The lock-in effect and its impacts. Now, the lock-in effect, where current homeowners are reluctant to sell due to their lower mortgage rates, continues to impact the market. This phenomenon is likely contributing to the slower turnover in some areas, particularly where price declines are observed, as sellers may be hesitant to move unless absolutely necessary. However, the increase in inventory suggests that some homeowners are beginning to list their properties, possibly motivated by the still relatively high prices. While some areas are experiencing price corrections, others continue to see growth. This variance suggests that buyers and sellers need to pay close attention to hyperlocal conditions when making decisions. And we are happy to break those down for you. So if you have any questions about any of those hyperlocal areas, definitely don't hesitate to reach out to us because we're keeping an eye on all of that. So the overall market outlook. The East Tennessee and Knoxville housing market remains in a state of flux with both opportunities and challenges. The region's overall market health appears solid, supported by a steady demand and an increased inventory that may help temper price growth going forward. However, the variances between counties suggest that the market is not homogeneous, and specific factors such as local economic conditions and buyer preferences are playing significant roles. So in conclusion, for potential buyers, this could be an opportune time to consider entering the market as inventory increases and mortgage rates begin to ease. For sellers, particularly in high demand areas like Knox County, the market remains favorable, though pricing strategies should be carefully considered in light of local conditions. Monitoring these trends closely will be crucial as the market continues to adjust to broader economic pressures and local dynamics. The East Tennessee and Knoxville housing market is currently experiencing a complex and varied landscape with both growth and challenges evident in the data from July of 2024. If you have any questions about any of this or about your specific area where you might need to sell, or your specific home, or if you're looking to buy in a specific area, don't hesitate to reach out to me. I'm happy to answer any questions you might have. This is Troy Stavros with Cornerstone Realty Associates here in Knoxville. I hope you're having a great day, and keep an eye on future updates.